Hey guys, this is Dr. Greg McLeod from the Elite Traders University. Welcome to Bulls versus Bears Weekly Forex Forecast. So good to be with you here today on our wonderful program. We're going to be looking at the forex market and the economic events which move the forex market. So I'm glad to have you here. I'm going to just set my screen up for you so we can get started. Let me share my screen. Here we go. And here we go. Again, welcome to Elite Traders University presentation of Bulls versus Bears for the week beginning December 9th, 2024. There's a risk disclaimer on your screen. Make sure you understand all of this associated with foreign exchange trading. And I've been doing this for about close to 30 years. Where does the time go? This is the 10th year anniversary of Elite Traders University. We've been helping traders. My mission is to help men around the world beat the Forex market, to beat the banker, to beat the dealer, and to secure financial freedom. So come over to elitetradersuniversity.com/apply, sign up for a free breakthrough strategy call so we can lay out a roadmap to your financial freedom. Okay, let's get to it. Okay, make sure you take a look at my brand new book, The Gold Rush Blueprint. Gold's an all-time high, and I have three powerful strategies for teaching people how to trade gold. It's a complete with a 155-page book, video modules, and three systems for making money in gold. That's called the Gold Rush Blueprint. Very proud of it. Check it out. You can use your phone and scan the QR code or go to bit.ly/Gold Rush Blueprint. All right. Let's go ahead and take a look at the dollar index, euro dollar, pound dollar, Aussie dollar, dollar yen, gold, silver, and the indices. Okay. So let's jump right to it. We're going to use one of my favorite tools, my market heat map, an arrangement of currency pairs by percentage change. Tells me what's hopping, what's popping, what's dropping, and what's not in the market. And it has a complete suite of tools. It's a Swiss Army knife for dicing and chopping and slicing the Forex market, because if you want to cut through all the BS that's out there, all the fake news, and get right to all the information that will make you money. Okay. And that's what we're here to do. You go free. It's $19.99 usually, but you can come here free and get used to the heat maps. Right now, the market's closed because it's a Friday night. But you can use the calendar. I can just refresh, click show more, and you got the full calendar for the week. Okay. We're gonna start with economics this time while I'm here, and then we just had non-farm payroll. Non-farm payrolls came out stronger than expected. We had some numbers revised up where we saw 227,000 jobs created in the U.S. Go USA. But the unemployment rate ticked up to 4.3%, which is kind of gave the market a little bit of a pause, a little bit of a caution. We did see the Nasdaq up, and we saw the dollar actually rally after a steep drop initially. Okay. But let's go ahead. Monday, we're going to start off Monday. We have lots of U.S. news. We have U.S. average hourly earnings month on month, 0.4%. Supposed to, that is the 9th. Yeah. Actual. Oh, did they leak the numbers already? Look at this. Monday, the 9th. The 9th hasn't happened yet, and the numbers are already posted. I'm going to take a screenshot of this. They might correct this. We might be looking at some type of it could be a glitch, a mistake. Yeah, it might be last week's. Okay, let's, no, here we go. This is the 9th. Sorry about that. No crystal ball there. That got my attention, right? Wake you up. December 9th, we have some Chinese balance of trade. Although we don't trade the Chinese renminbi or the yuan, but we do trade the Australian dollar and the New Zealand dollar. Both currencies actually have seen a rebound and could possibly be on some stronger Chinese data. Okay. Then we have RBA interest rate decision. We have a Reserve Bank of Australia. They have an interest rate decision. They're supposed to keep rates unchanged at 4.35%. Remember, central bank interest rates are one of the major movers of currencies. So you want to be there or be square at 10:30 p.m. Eastern time. Okay. Moving right along to we don't have any major announcements to Wednesday, December 11th, as we come to the end of the year. We have U.S. inflation numbers, and that's very important because we have an uptick in inflation, and we need an uptick in jobs, but uptick in unemployment rate, right? And so we want to see, the data, the data-dependent Fed's going to be looking at inflation as well. And if inflation is going up, then it's going to be hard for them to actually cut rates because we're looking for a rate cut, another 25 basis point cut at the Fed's next meeting in December, right? So CPI is going to be very important at 8:30 a.m. Eastern time. They're looking at a drop from 315.66 to 315.3. Inflation rate year on year is supposed to actually rise from 2.6 to 2.7. Core inflation rate month on month supposed to remain unchanged at 0.3. And the core inflation rate year on year, that's outside of food and energy, which I use a lot of food and energy. I don't know who cares about inflation without food and energy, right? 3.3% versus 3.3. And the inflation rate month on month is supposed to actually remain unchanged at 0.2%. So again, this is going to be very important information that the Fed's going to be watching. All the big players in Wall Street are going to be watching these numbers. And so we looking at probably the euro and the dollar pairs will be mostly influenced on Wednesday, the 11th. On that same day, we have the Bank of Canada interest rate decision as well. They're expected to cut rates from 3.75 to 3.25%. Their economy is in trouble, and they might need to cut rates that would make a softer dollar CAD. CAD, the Canadian dollar should be dropping versus the U.S. dollar, just skyrocketed above the 140 handle, and we'll talk about that in the technicals part. And then the Bank of Canada press conference is going to be released as well. Then at later on in the day, around lots of Aussie data, Aussie unemployment rate, full employment, and participation rate. So a lot of employment data. That's going to be at 7:30 p.m. Eastern time. So right after dinner, you can power up your trading platform. Take a look at the Australian dollar, and the Australian Aussie Swiss, Aussie dollar, Aussie yen are going to be impacted by this number. Okay. And then on Thursday, we're going to have Swiss National Bank interest rate decision. And they're actually looking at cutting rates from 1% down to 0.75. So they really didn't get too far out of the park there, right? 25 basis point cut as softness in Europe for demand in their goods has caused them to try to mitigate possible recession with lower interest rates to stimulate the economy. And not to be left behind, the ECB, the European Central Bank, is going to have an interest rate decision as well. They're looking at cutting rates from 3.4% to 3.15%. And we have the French economy the government just collapsed. The government collapsed. Germany's economy is souring, and the European Central Bank is trying to get ahead of the game with lower interest rates to stimulate and to cushion the blow of two major economies and governments having serious time. In the UK, even though they're not part of the European Central Bank, they are part of Europe. And so that whole region seems to be in a little bit of a mess. And so the central banks are riding to the aid to try to save them. Thursday, 8:30, we have U.S. initial jobs claims. This is a volatile weekly number, and it's supposed to drop from 224,000 to 221,000. Remember, we've had hurricanes. We've had, we just recently had an earthquake in California, 7.0 earthquake and possible tsunami. And in Northern California. So there's a lot of disasters, fires, all kinds of things that have impacted the employment number week to week. But core PPI comes out next year on year. PPI stands for the Producer Price Index, the prices that the producers have to pay. They're going to survey businesses, and they're like, hey, are we going to be bullish or bearish? Core PPI looks like it's going to rise from 3.1% to 3.3%. Year on year, month on month, supposed to remain unchanged at 0.3, and the month on month, the core that's excellent, leaving out food and energy. PPI month on month supposed to rise from 0.2 to 0.3. ECB press conferences later on that day after their possible interest rate cutting is forecasted to cut. They may not cut, or they may cut even more. But even a cut in rates usually means the currency will fall. Right, and the euro is already in a downtrend, so we might see that downtrend continue. And then we have later on, on that Thursday, we have Japanese data. The tank and large manufacturers index supposed to rise or drop from 13 to 12. Friday, we have UK data, GDP month on month supposed to rise from negative 0.1% to 0.2%. GDP year on year is supposed to rise from 1.1% to 1.6%, which is good news for the UK economy. Pip pip cheerio, right? And then European, the German flag balance of trade supposed to drop severely from 17 billion to 15.7 billion, and that just adds on to the already bad news that we know that's coming out of Germany, one of the strongest economies in the Eurozone. And then Sunday we have Chinese retail sales year on year supposed to drop from 4.8% to 4.5%, and industrial production year on year drops from 5.3% to 5%. Remember, the Chinese numbers, we don't trade the Chinese currency, but we do look at the Australian dollar and also the New Zealand dollar, and as well as oil. China is one of the largest consumers of oil and raw materials. And if their economy is slowing down, then they're not consuming a lot of oil, and that could impact oil in a negative way, oil prices. Okay. So, let's jump into the technicals. I'm saying, okay, Greg, take us to the technicals. I know you've been waiting for the technicals. We're going to be using TradingView, and I'm going to pull up a chart of the dollar index, the U.S. dollar index, the basket of currency pairs versus the U.S. dollar. And it gives us a good view because 85% of all transactions involve the U.S. dollar. The U.S. dollar is the reserve currency of the world. So knowing where the U.S. dollar is going to let us know where 85% of the market's going to go. If you don't know where the U.S. dollar is going, then you're just, you're lost, right? So here we go. We've got, basically it's been moving in a sideways channel since, October 2022. So like been 3 years, we're kind of lost in space here. In the sideways consolidation, we do have a slight rising uptrend. So the primary trend is up, and also the intermediate trend is up as well, as we can see by these stacking green candles. Right, I'm using Hakinashi candles to give me a clearer view of the market without all the noise of all the other candlesticks. And so that's what we use in Elite Traders University. Looking at the in the weekly chart, we can see we are topping at the 107.79 area, moving sideways a bit, and then we've got we've got this a bounce from that 107.79, and we're looking at a pullback, maybe a little bit of a respite after hitting this area, repeatedly. We've been hitting this 107 area repeatedly. So we're just traveling in a range. And we'll probably be in that range until we actually get further indication from the Fed, right? The Fed will, if they cut rates. Now, in the past, we've seen actually, traditionally a rate cut usually is bearish for the US dollar, but we have seen 3 rate cuts, a 50 basis point cut and 2 25 basis point cuts. And we actually have seen the U.S. dollar rise in spite of those. So, part of that is due to the election uncertainties that we've had for a long period of time. Those uncertainties have gone away with the election of Donald Trump as the 47th president. Big congratulations there. And so what's happened is like buy the rumor, sell the news. And so now we've basically have seen the dollar take maybe taking a little bit of a pullback. Maybe come back down to this. We've got a nice. We have 2 established points. Why I teach my students at Elite Traders University. Take a swing low. We can use a Fibonacci tool measuring the low to the high, and that tells us how far price has gone. And usually, price comes back to a level of support, either a 38% retracement or 50% of the move around the 103.97 area, or this 105 area seems to be something that might be of interest. But I'm actually looking maybe for a pushback to the 103.88 area and maybe a continuation, right? Now, what would violate that is we see price get back above 106, and then we could break out and move higher, okay? And I think, because right now we have a bull flag, and we have this bull flag pattern, right? And usually a bull flag pattern, we take the height of that flag and we look at it to break out. Because you actually look at the Canadian dollar, it's already broken out too. So we can take the height of this consolidation, right? This break has moved. We have a profit-taking decline where people took profits, and then we're seeing this extension. Now, the dollar's been beaten up on the Aussie and Kiwi and the Canadian dollar, but the Bitcoin has been the new kid on the block, has been kicking the dollar's butt, and also gold's holding its own as well. So bulls versus bears, I am bullish. I am bullish the dollar. Right. Right. So let's go ahead. We're going to take a look at the anti-dollar. And when we take a look at the anti-dollar, we're going to see some things. So again, I am bullish the US. Let's look at the anti-dollar, which is the euro. Euro is called the anti-dollar, and like the United States of Europe, that's like the other side. When the euro goes down, the dollar goes up. When the dollar goes up, the euro goes down. There's an inverse correlation between the two, and you can see that we have been on a downtrend for with some rallies in between, but the overall the primary trend is down, and we've seen some retracements against that downtrend. Some respite, a little bit, take a little breather before going farther down. And then we have this level of support on the 95 area, this low that we got back in around October 2022. It hit that low, and it looks like we're trying to retest that area. However, we do have a ton of support here in this 105.55 area that we saw back in April 1st, and again in November. We saw again in January 2017, and we saw it again October, and we're bouncing off this area. So lots of support here, and so we have to breach this like 104.50 area. We can see prices move down. Let's go down to, and we can see at the support area that we're gaining some momentum or losing momentum for the bears, and we can see maybe some type of a pause here, kind of a neutral stance after we've hit this area multiple times. Go down to a daily chart, and maybe we got a little bit of penetration of that area, and then prices came back up, and we're just kind of the trend is still down, and so I would look for a break of this rising trend line that extends from the low of the 103.60 area, and we can see if we break down below 104.50, we could probably return downward. The odds are that the euro will continue. We do have the ECB rate decision coming up, and so that might give it a little bit of a bounce before we move back down. So I'm cautiously bearish. Okay, so let's get into the nitty gritty there. We have the 200 simple moving average also capping out gains too, and so I'd like to see like that break for us to get lower on the euro. Again, looking for the euro to go lower. Okay, let's take a quick peek at Aussie dollar. Aussie dollar has been really stomped on. Just I'm gonna remove all the lines here, and we can see we took this short, but it's finding support. Lots of support in this zone. This is 63.87, 63.50 area. So we haven't the bears haven't really advanced their cause to this low. They want to get back here. They want to retest this 5,500 area, but lots of just rock solid support. Where price, every time we get down there, buyers step in, and they're kind of like playing the range, right? Which is we buy support, sell resistance. So we can see multiple hits against the support, and then bounces against that 68.96 area, right? I've been hitting that as well. So we've been in this for a while. We've been in this for 2 years, going on a year and a half. So usually when we get into a range like that, we usually get some type of a break. This looks like a bear flag. And if this bear flag's out, we look for prices to break out below this area, this zone, the 63.40, 63.50 area. And we look for price to come back and retest this area here. There's like a big air gap. There's no support here. And so once price breaks through, we can see a very clear drop. Right now, we're touching support here. We saw maybe Aussie maybe giving us a little bit of a bullish bounce, But remember, the bounce is in against this downtrend, sideways consolidation. So you play the range until you get something otherwise. I am really cautiously short-term bullish that we could probably get a bounce here for a quick profit, right? But ideally, I put my longer term hat on. I want to sell this. I'm not really keen on uh, going against this big market tide here on the monthly. Let's look at the weekly, bring it down, and we can see that it did. Buyers did step in, right? Daily chart. Again, this is that 6371 area. You look at go back to a 4-hour chart. Again, we have this, this area here that's incredibly bearish. I wouldn't want to jump in front of it. I definitely would like to short it, and I have shorted it. Right, we had a nice flag pattern break and then went down, and now I'd like to see on this lower time from the 1 hour, I'd see it break that line, and then I would sell it. That's what I would do. Okay. All right. The other currency pairs are going to be the same, just the dollar, but let's look at the dollar pair, like dollar CAD, and we can see I slammed this. I hit this thing so many times. My friend, am I still in it? Oh my goodness, I'm still in it. I forgot to close it out. Nice, nice. Like, hey Greg, it's like, yeah, that trade you got on, yeah. Well, why don't you maybe you should close it. Maybe I should, huh? Maybe I should. Maybe I should. But right now I'm going to keep it open. I can't close it. It's Friday night, so I'm up. Where did I make sure where I was sharing? You know what? I was actually using this as an education. I trade live in front of my students to let them like, hey, look, what's going on here, right? So we're again arrow, trade settings, execution labels, executions. Right. Oh yeah, I picked the bottom on that one. Look at that. Yeah, I took it. I took this down to the short side. Then I got long, and so this is where I got long, guys. I got long at 140.32, right? And then so we're still in it. I'm going to share with my students, right? And in fact, that would be my target to get out if I were like, I watched the football game, go Lions, and I fell asleep and I didn't wake up for non-farm payroll. But I said, I'm gonna hold it through non-farm payroll. The dollar's rallying on good news and the economic news. And hey, I got paid, right? I was like 81 pips. At $100 a pip, that's $8,113, right? So again, guys, this is what I do. I've been doing this for 30 years. I'm probably one of the best kept secrets on Wall Street, and they want to keep me secret because I help people make money. So if you want to learn how to pick bottoms and tops, so they say always, even they say on Wall Street, he who picks bottoms has a smelly finger. Well, I pick this bottom, and my finger doesn't smell. And so click the link in the description and to sign up for our free profit acceleration call and see if I can help you become a profitable trader, and so you can end the madness and relax with profits in your trading account. Okay. All right. Dollar, I'm bullish, and I'm cautiously bullish against this line. We might get a little bit of a pullback because people who got long are probably going to take profit on Monday. I wonder who that could be. Ring the bell. Moi, right? I never hold a trade over the weekend. I just forgot that put my take profit there. I would have taken my take profit. My take profit was right there, right? That's where it would have been, right? But the market is closed. They're not going to let me close it. Right. All right. So that's cool. All right. Moving right along. $8,000. It'd been nice. I'll take it to the casino. No, I'd not gamble that much money. But anyway, yeah, I'll buy a nice steak. Let's go dollar yen. Dollar yen. It hasn't gone anywhere. It really hasn't done a lot. It's really weird because we just had some insurrection or not insurrection. Oh, it sounds familiar, right? No, we had martial law being declared in South Korea. And so a lot of our products, a lot of our electronics and other things come out of Korea, and so you know, uh, usually the yen will rally when there's some type of global or some type of instability in the world. Um, and we can see that the right now the dollar yen, is it's just really a doji, right, for the month. Indecision. I mean, we had this big move up, big move down, and now we're just like, ah. Usually, though, low volatility price compression leads to explosion, right? So this is indecision. Where do I want to go next, right? Well, usually like after the doji, you get an explosion to the upside, but now you got another doji, another question. Do we really want to go higher is the question being asked. And we can look at the market and see, doesn't look like it, right? We have a rally up. It looks like a head and shoulders pattern. It looks bearish. On the dollar yen, there's a weekly chart of the dollar yen, right? And it failed to make a new high. So we have this head and shoulders pattern. And usually price comes back down to the neckline. We would draw a neckline, right? You can draw some type of a neckline. And then you take a line from the top of the head to the neckline, right? And then you clone it like a sheep, right? And then you take it and you can expand it from there. And that's the typical target that we would see for a head and shoulders, right? Now, this could fail. A break above 157.04 and we go back to the old high, would invalidate this pattern. But this is a bearish pattern. The conservative target, our conservative target would actually just be to the neckline, right? The neckline would be our conservative target. And that'll take us to about 142.29, right? And that could be it. Well, that's a good 40. That's about 700 pips, which is not a bad chunk of change. I wouldn't, better than a sharp stick in the eye. I wouldn't kick it out of bed for eating crumbs, right? So there you go. It's not bad. So I would be bearish. It's hard to believe to be bearish. Now, let me show you an example of a failed head and shoulders pattern right here, right on the same chart. The Bank of Japan's kind of, they're kind of sneaky, right? So there's your head and shoulders. Oh yeah, head and shoulders, let's short it. And then boom, it shot up, right? So you want to look at that old high. That's the failure point. When we break above the right shoulder, that's a failure point. So again, just don't take this at face value because sometimes they try to sucker people into one move, right? And then takes off. So I would say 56.75 would be my MOB or make or break point. And if we break above that, then I would say, look, the head and shoulders pattern is a fake out. I'm going long, 165 and above. Here we go, right? So I am cautiously bearish. I'm actually leaning more toward bullish, and this pattern may be invalid. Okay. So, but we can drop down to a daily chart. You can see, look, it's kind of slowing down. It's like, yeah. We got this double bottom, maybe a high and tight bull flag. Maybe we're just kind of like, it's flagging out with double bottom, flagging out. We probably see a push up higher, right? So we might not get to the head and shoulders target. Okay, pound dollar. We got some pound data here, and I was crushing it the other day. I was just stacking orders. Once I got my signal to get in, I just loaded up the boat and then took it up and picked the top, baby. Pick the top, ring the bell. Right? I've been using the same system for 20 years. It's beautiful. It makes money. It's the sweetest thing. It's almost like a magic. It's like rub the lamp. I want some pips. Your wish is my command, right? If you want that type of system working in your trading, then click the link below. Sign up for a free profit acceleration call with me, a Zoom call. I'm going to talk to you personally. No BS. We'll see if you're qualified, see if I can even help you. if you're really dedicated to the system you're doing, even though I get people who are like dedicated to their system, but they're losing. But because they feel comfortable with it, it's like this is not about comfort. If you want real money or you just want to be comfortable, if you're comfortable being a loser, then that's you. But if you want something better, if there is something better out there, and I have it. So anyway, British pound looking good. Pullback against the trend though, but we have a trend on the 2-hour chart. Higher highs and higher lows. This is our primary trend. I'm gonna make this bright like gold. It's like, right? And we may come back and test this area, this 127.11, and we might get a bounce there and start this move right back up to re-challenge 28.10, right? So this has to hold. But it's been tested numerous times and it's held. And so maybe in the next couple of days, we'll see a retest and a bounce, which would give us an inside day candlestick or a harami, and that usually means that we might get a reversal moving forward. Okay. So I am cautiously bullish on the pound on cable. However, we break this, I can see us going right back down to 26.16. So this trend line has to hold, right? All right. Okay, so I think I'm pretty much done with the currencies. I'm gonna go to gold, and we're gonna take a look at gold. And gold, and look, I've taken I hit this thing so many times there. Oh, but buys and sells. Let me get rid of these. This can kind of get distracting, like going, Greg, how many trades did you take? Lots of them. Brokers love me. I create so much volume for them. There we go. Ooh, this is a monthly chart, and we have an inside day, a little baby harami in there. And it's like, skin on belly. Could be a bearish sign, but the trend is up, guys. Just look, higher highs and higher lows. Yeah, you might have been able to run in front of the car and grab a couple of coppers, but you know what? You're gonna get run over by roadkill. You want to wait for confirmation, a structure change, right? Structure. You gotta say it with a. There we go. And we got pullback. People are like, oh yeah, so it's like, yeah, these guys sold too, and we're here. Those guys are gone, right? They've got crushed, and now we get a pullback. They take a break. This thing's been rallying. Give the bulls a break. They've been rallying for a long, long time, and they take a little bit of a break. And then we're going, oh yeah, we need short gold. All right, short it. I'll take the side. I'll take your side. Give me your order, and I'll take it. All right. This thing could break from the north side, and we finally get above 2,800. And it's going to be because if they do cut 25 basis points, usually a cut in interest rates is bullish for gold, right? And we can see gold push back up toward this 27.87. We're currently sitting at 26.38.15. You look to a daily chart, and you can see we are lots of dojis consolidation day after day, sideways consolidation. 1, 2, 3, 4, 5, 6, 7, 8 days of consolidation. Usually that 9th day we'll get some type of resolution or breakout. And we can see a continuation. We got a little flag pattern here, and we can break to the north side. Okay, so really wait for wait for confirmation. If you don't have the pip and run system with the predictive function in it, then I would just use traditional technical analysis and whatever you use, right? To your tea leaves, your funky, your entrails, whatever you use. In fact, that's what banks, when they look at charts, banks look at charts like voodoo, tea leaves, something totally exotic, because they control the market. They don't need charts, right? Anyway, moving right along. And they don't want me to tell you that either. Anyway, moving a 4-hour chart. And again, we went from high volatility to low volatility, high vol to low volatility. So this could be a break back up, right? Sideways consolidation, lots of support coming in this area. We've got a rectangle, right? And usually a rectangle, we get some type of a breakout. And if you want to find out more about trading gold, you can check out the Gold Rush Blueprint, where I have a video course and ebook, and it's a very good price. All right, moving right along. Let's look at the, I'll say Bitcoin for last, but let's go ahead and get to the indices. And okay, I want the futures indices though. Oh, no worries. YM is only got the YM. Look at the Dow, the Dow E-mini. Take a look at that, and we can see a lot. I mean, look at that. That's a strong uptrend, just barely higher highs and higher lows. Very strong trend. You know, we have that sector rotation out of tech into the Dow, and that has been tremendous. Look at the weekly chart, higher highs and higher lows. Just buying those dips, guys. That's all you want to see is when we get the dips, though, that's the beautiful buy opportunities on this, right? But as you can see, though, we're getting smaller. We're not getting the big jumps as we've seen because we're getting close to the holidays, and but if you go down to smaller charts, smaller time frames, I'll call 1 minute. You can see we're breaking that 200, right? Right. And we're completing an ABC correction, and we're finding support. This is a 1 hour chart. It's finding support at this 44,696 area, right? And we've got downward. We have this basically a gap higher, and we have this little high there. So we could come back and test 4413 and put that in terms of Fibonacci. That will take us to the 50% retracement. Happens to be there. Who would have guessed? Who would have thunk? Right, 23% retracement. We're sitting right there. 4466, 44,666. However, 661. However, this may not hold. We might see a test of the 44,360, right? So this ABC, right? But I think we pop back up. I think we get a move back higher after a 3-wave correction against the trend. We have this old wick back here at 44,050 that can come into play, right? But this is a topping rectangle, and we would like to see prices sell off and give us a better entry to get back long. 4412. I'm not interested in any shorts. I just wait to get long, right? But this may not be it. Let's look at S&P 500, and let's look at the monthly chart again. Another beautiful, this straight. Look at this. This is what your ancestors dreamed of when they traded stocks in the 90s and the 80s and the 60s, and this is this is generational, right? Usually after a big rally, super rally, we go through 10 years of sideways consolidation. So enjoy this, guys, because 2030 might just be right? I remember back in 2024, 2025, we got this really big rally. It's 2030 sucks, right? So make your money, make hay while you can. If you don't know how to trade and you're waiting and waiting and waiting, the party only will last for so long. And then we'll go from high volatility to low volatility, and that low vol could take 5-10 years. So this is a generational time to learn how to trade, to master the market. And, I'm still on this planet and actually trading live and helping people. I might get to the point where, I think I've done enough for humanity. I'm heading back to the beach, right? Remember, I spent 5 weeks in Maui, right? So, well, I want to work with Greg. I'm sorry, you can, I might. Elite Traders University we have really good teachers and really good traders who I've trained personally. That can, but if you want to work with me though, that window may be running, be closing soon. Okay. S&P 500 higher trend, generational move. To be alive, I'm so thankful to be alive. Thank God I'm alive during this time in history because it's such a beautiful time, right? Higher highs, higher lows, beautiful uptrends, just easy, just print money. People complain about, the eggs are high and the gas is high. One of these trades and your money worries are over, right? If you take the time to learn. We've got 6112. I remember when we were 4,000 on the S&P, 2-hour chart. Again, nice stretches of buy, sideways consolidation, and then a breakout. We got consolidation here. I mean, it's starting to slow down a bit. The fun, easy money. I mean, we've got this topping formation here. I mean, we're just kind of like stuck, right? And it's slow. And ideally, you would love to see a sell-off. Why do you want to see a sell-off? You want to see a sell-off. You want this oversold condition to actually unravel, and it will drop and allow people to get into the market, right? At a better price, right? You don't want to buy high. You want to buy pullbacks. You want to buy discounts. Right now, the market's not at discount, but you can find discounts in intraday if you go down to smaller time frame charts, maybe like a 5-minute or a 3-minute. And there's lots of opportunities where you can take a couple of few ticks here and there, right? Anytime there's nice support at 6,090, a whole number round number, right? 6090, right? 6090, and then we've just look at that. We wicked that, it pulled back. Look, banker support at 75, almost a 3/4 area, up to 6111, pull back, rally, and we have an uptrend. We have an intermediate uptrend, right, on the smaller time frame, right? And again, I mean, you can make money on the short side, but I'd look at that. I'd be we've got a double bottom, we get 6103, or even this old high 6101. You can just grab a little bit, get in and out and grab some, right? At these resistance, these old peaks tell you where price is going to go next, right? With probability, right? Highest probability. So we still got an uptrend, and I think we can probably all get all the way back to 61100, right? This is a bull. We have a bull flag pattern that's working out right here. Beautiful bull flag, right? Just come on now. Just flagpole. Dun, 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 boom, right? And then so we got this. We go boom, right? Oh, thank you, green. Turn green. Right. There we go. Okay. So, I mean, that's what I'm looking at. Hopefully that's helpful. Let me know in the chat box if you're watching this live or if you're watching the replay. Tap replay in the chat box. And if you you've got opinions or what's your take on it, I'd love to hear from you. Go ahead and type in the comment section. I usually try to get back to you. I look forward to talking to you soon. Okay. So that's ES. We got let's say E. Y, we did YM already. Then YM. No, we did. We need to do NQ, right? NQ, and we'll take a look at that. And struggling. It looks like it's struggling. I mean, nice again. This is what it looks like on the monthly chart. Walk it back down. I start the higher time frames. Walk our way back. Weekly chart up. Daily chart up. Like 4-hour chart, right? Nice entry right there. 2-hour chart, right? And I drew this back. I drew this before. I said, look, we got a high and tight bull flag, trend line break, and look, boom. That's what we did. We broke out, just like I said last week. It's easy. This market's easy, right? A 30-minute chart. I just wouldn't sell it, guys. This is an uptrend. When you're selling an uptrend, you're basically running out in the middle of traffic to grab $1 in the middle of traffic, and you're going to get hit by a truck, right? But if you grab this rally, nothing's perfect. You get chopped around, but this is kind of a chop. We'd like to see a pullback. I'd like to see us get back to like a 21,580, a pullback to support, right? And then we could get a nice clean move here. But you can get down to like a 3-minute chart and actually find some really nice scalp opportunities, right? I mean, there's just lots of them here, right? When we get back in line with the intermediate trend, which is up, right? And look, we're sitting right at support. I'm bullish, bullish NQ. We got support at 6130. There's more support at 6111, right? Lots of support there. We do have lower, we have a nice little ABC, maybe a 1, maybe a 2, and then a retest of the old high, right? Again, we're going to be moving sideways. We've got some ECB, a lot of central bank stuff that goes on in the currencies. Does impact this a little bit, but it's Christmas time. It's the fourth quarter. November is like the number 1 month for trading, and December is like the number 2. So we're in a really good thing for new highs in Q. Okay. All right. How about US the rest of 2000? Russ, baby, Russ. Let's go now, Russ. And it's up. It's up and it's good. Looks like a crossbar, like a field goal. It's up and it's good. Big good luck. Shout out to UT Texas as they face off against Georgia. You know, so go UT, hook 'em horns, baby. Let's do it, right? So we get the hook 'em horns, like even the US 2000 likes the hook 'em horns, you know? Okay, let's drop it down to a weekly chart, higher highs, higher lows. You got the daily chart pullback, but that pullback and uptrend is opportunity. You just go, okay, I want to buy, baby. I want to buy when I start seeing red, right? And then we see it like our ABC correction. We're seeing a little bit of a pullback. Support comes in at 23.8960. Let's drop it down to a 5-minute and let's drop it down and look. That's where opportunities, after a big move in the market like we've had over the past year, sometimes you're going to get down to micro world, down to the 5-minute, the 3-minute chart. You're going to find lots of great opportunities in the market. And we get this correction down, nice double bottom, and it's almost like that bull flag that we saw on the NASDAQ on NQ, where we can see prices basically rounding bottom and then maybe head back up to 24.42, or again, lift off the 200 SIP moving average. And we can see that, as long as we can hold 24.02, we get a shot right back at 24.22. If you watch this stuff and you see me make these forecasts, type in the comment section, hey Greg, that hit target, or nah, you missed it, Greg. Right? It'd be really cool, you guys confirm, this in my cracked crystal ball. Okay. So anyway, I'm bullish. Let's go to where we want. Everyone's talking about is BTC USD, right? Can you believe the crypto market has a $2 trillion market cap now, right? Thanks to Bitcoin. The crap coin I bought was a Tron at 0.0001, probably is not part of that crypto market cap, right? 99.999% of the market cap is probably Bitcoin and then Ethereum. And so instead of buying all those different projects and ICOs I bought before, might have been a lot better just to put it all in Bitcoin and left it, right? But anyway, we learn, right? We learn. We live and learn. It's all lessons. Remember, it's all lessons. And we can see nice, again, higher highs and higher lows, almost a parabolic move. You really don't hear people talk bad about parabolic moves. It used to be, the parabolic move will usually collapse. Well, this is a parabolic move, and it didn't collapse very far. And we can see that we hit that 103 area. I think I scalped that. That was pretty cool. And but we have, just higher highs and higher lows. We don't have a prior knowledge. The technical analysis is based on looking back in time and looking where price has been. But when you're at all-time highs, there is no history. So what can you use? You can use Fibonacci. You can use, some type of a Fibonacci projection and get all kinds of projections. In fact, I did projections. If you look at my old videos, I have some old Fibonacci projections that we have actually hit, right? 618, the 100% expansion is at 107,431, 107. So we can, we're at that $7,000 from where we are, right? I mean, nothing near this giant run from here, from 2018, right? I mean, who bought Bitcoin at 700 and sold it at 1,000? Thought they were a genius, Look at that. Just take that Fibonacci. Look at the hits: 3.26, 4.236, right? Oh wow, the 68.54 expansion target is at 146, 109, which is 1.618. 143.40. So a lot of people talk about the 150 price target on Bitcoin. So it's like, you think you missed it? There's still another $50,000 left in it, right? Just got, buy one coin. They said just buy 0.1, hold on to it, right? Anyway, guys, I want to thank you so much for joining me for this. Remember, you can always come back to go Elite Traders University, visit our website. And you can also, if you want to work with me, if I'm someone that you might be interested in working with, let's get on a call and let's find out more about our program and how Elite Traders University and the Pip and Run system can help you make money. This is Greg McLeod signing out. Peace and pips. Bye.
If you felt a spark here and want to see how these principles can be used in your own trading, go to www.elitetradersuniversity.com/apply to book a free session with our team. We have helped hundreds of people remove the frustration and obstacles in trading to become consistent, highly profitable traders. These are proven principles that just work. Happy pipping!